Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 6, 2025, and we're diving into Corpay's recently released fourth quarter and full year 2024 financial results. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Corpay, a leader in corporate payments, has just reported some impressive numbers for the end of 2024, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. Corpay reported a net revenue of $1.034 billion for the fourth quarter of 2024, marking a 10% increase from the previous year. John, can you elaborate on the factors driving this growth?
Absolutely. The revenue growth was primarily driven by a 12% organic revenue increase, which is quite significant. This was supported by strong performance across all business segments, particularly in corporate payments, which saw a 38% increase in revenues. Additionally, the adjusted EPS for the quarter was $5.36, a 21% increase, showcasing their profitability improvements.
Despite the revenue growth, net income saw a slight decline. What were the contributing factors there?
The net income for the quarter was $246 million, a 4% decrease from the previous year. This was mainly due to a goodwill impairment charge and a discrete non-cash tax provision, which collectively reduced net income by approximately $37 million.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 55 cents for Corpay, based on a survey of 7 analysts. How did the actual results compare, John?
Corpay exceeded expectations with an adjusted EPS of $5.36, beating the forecast by 31 cents. This outperformance is a testament to their effective cost management and operational efficiencies, which have allowed them to surpass their midterm growth targets.
That's quite impressive. What does this mean for investor sentiment?
Beating EPS forecasts generally boosts investor confidence, as it indicates that the company is performing better than anticipated. This could lead to positive market reactions and potentially drive the stock price higher.
Strategic initiatives and future outlook. Corpay has been active on the strategic front, with 2 significant acquisitions in 2024. How have these impacted their business, and what are their plans moving forward?
The acquisitions have been pivotal in scaling their corporate payments segment, which grew by 20% for the full year. Looking ahead, Corpay aims for a 10 to 12% growth in revenue and adjusted EPS in 2025, despite challenges like foreign exchange rates and fuel prices. They also expect to generate $1.5 billion in free cash flow, which will support their capital allocation plans.
It seems like Corpay is well positioned for future growth. What are the key areas they are focusing on?
Corpay is focusing on expanding their corporate payments segment, projecting organic revenue growth in the high teens. They are also leveraging their acquisitions to enhance their service offerings and improve operational efficiencies.
Key takeaways. In summary, Corpay has delivered a strong performance in the fourth quarter and full year 2024, with record revenues and adjusted net income. Their strategic initiatives and focus on corporate payments have set a solid foundation for future growth. John, any final thoughts?
Corpay's ability to exceed EPS expectations and their strategic acquisitions position them well for continued success. Investors should keep an eye on their execution of growth plans and how they navigate macroeconomic challenges.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Corpay's performance in the comments below.